most of you know, I got out of the stock market around May and June last year, 2015, because my rich dad wrote a book. I wrote a book called Rich Dad's Prophecy, and it was predicting the biggest stock market crash in history coming in 2016. And in January of this year, it held a promise, but the markets got pushed back up again, so everything looks fine. So we have on both sides of the equation, as usual, we always have three sides to a coin. We have those who say the markets are going to keep going up, the economy's fine, and there's other people who are bears who are saying it's going to come down. And where Rich Dad stands is stand on the edge of the coin, not heads or tails, but listen to both sides. So today we're going to have a very exciting guest. His name is Dr. Alexander Elder. I've heard about him for years. He has fans throughout the world. He's a professional trader and author. He's the author of Come Into My Trading Room, Barron's 2002 Book of the Year. So Dr. Elder was born in Leningrad and grew up in Estonia, where I'll be in November this year. And he entered medical school at age 16. At 23, while working as a ship's doctor, he jumped a Soviet ship in Africa and received political asylum in the United States. He worked as a psychiatrist in New York City and taught at Columbia University. As most of you understand, investing is really about psychiatry, is about the emotions of a market. Unfortunately, as Rich Dad says, there's no financial education in school, so most people are just reactionary. They don't really think about the ups and downs of a market. So for those of you with a 401k and are hoping the market stays up, this is your program. For those of you with an IRA, this is your program, because if the market crashes, you go with it. And if it goes up, you make money. But also those of you with, state pension plans, they're called PERS, like CalPERS and stuff like this. Right now, they're severely underfunded because all projections were based upon 8% growth of the stock market per year. And as you know, since the year 2000, we've had three major crashes in 10 years, 2 stock market and 1 real estate crash. So this is a very important time to pay attention, especially if someday you hope to be playing golf for the rest of your life. Any comments, Kim?
Well, your three sides of a coin reminds me of the definition of intelligence, which is being able to hold 2 opposing points of view at the same time and still function.
Yeah.
I think a lot of people can't do that. They have one point of view and they want everybody else to have that point of view. But I'm excited about this show. Dr. Alexander Elder. We have, in the world of trading, which Dr. Elder is an expert at, you've got your technical trading that looks at charts and numbers and figures and all of that. You've got your fundamentals, which looks at the bigger picture, the whole picture. And then you've got the psychological approach to trading, and that's what we're going to talk to Dr. Elder about. And if you're in the stock market, what psychological tips might you need to weather whatever is coming next? So I'm excited.
Yeah, because there's 4 types of intelligences. There's mental IQ, there's emotional intelligence, which is EQ, there's physical intelligence, they call it muscle memory, and then there's spiritual intelligence. So all of those count. And Dr. Elder is an expert at dealing with people who are either strong or messed up on all 4 intelligences. So anyway, welcome to the program, Dr. Elder.
Thank you very much.
So let me ask you this. Most people are risk adverse. I was at a party 2 days ago, and I was talking about the stock market crashing. This woman came unglued. She goes, But as a trader, you don't really much care if it goes up or down, because you can handle the ups and downs of a market. Is that correct?
As a trader, here's what I do. I think the market oscillates around value. The market is a discovery mechanism. It discovers how much a stock or a commodity or anything else in the world, tomatoes for that matter, how much anything is worth. And it discovers it by fluctuating, going up and down and kind of staying around the center line. And that's where the value is. So I have instruments and tools that help me identify value. And then I look for deviations from value. And when the market deviates far away from value, I step in. If it deviates high, I'll sell it short, and if it deviates down, I'll buy it. That's basically the game.
So a professional trader is watching the ups and downs of the market. And so like when I talk about a market crashing, which I love, because that's when I get rich. But most people can't handle that crash, can
Well, most people aren't. Most people, like in 401ks and things, they don't know what to do if the market were to come down. Their 401k, you can't make. You're going to lose money in your 401k if the market comes down, right?
Well, the best advice on that came from Warren Buffett, who says he loves bear markets because that's when he goes shopping. But of course, he goes shopping because he slows down his purchases at the top of the bull market. So when things are very happy and when most people shopping, that's actually the time to be doing what you, Robert, did, you say in May, sell. So now you're sitting obviously in cash, and when this thing goes down, you have the firepower to go and load up in cheap stocks that people who are panicking throwing out. You know, the same stocks trade for decades. I mean, some new stocks are coming in, but basically the same stocks. And it's always somebody is buying and somebody is selling. The professionals are selling at the top and buying at the bottom. The amateurs are doing the opposite. And so stocks go from strong hands to weak hands and back.
So that's the reason that we wanted to talk to you, because the average person, the way I look at it is this, you know, if, let's say, J.C. Penney has a sale, all the consumers rush in and they say, oh, well, I can buy Levi's jeans at half price and all this stuff. Yeah. But when the stock market has a sale, you know, they're selling Apple, let's say, at half price, the average person runs out, right? They disappear. They when they should be shopping, they're running.
You know, I've heard a joke. What's the difference between a trader and a housewife? Housewife goes shopping every week. Let's say she buys 3 cans of tuna for $1 each, and one day she goes to the supermarket and says, "Tuna on sale, 2 cans for $1." So she's going to buy extra, more. A trader goes by the shop, and there's a sign in the window: Bally shoes, normally $150, today only $90. He comes in, takes them off of his feet, and says, "Here, buy mine."
That's very, very good.
I would rather trade as a housewife, but the strangest thing is that people who are quite sensible in their everyday lives lose that sensibility when they approach the stock market. Well, and by the way, that's why, in my experience, women make better traders than men, by and large.
Of course we do.
Very smart man, Dr. Elder. Very smart man. I'll pay you after the show's over.
So let me ask you this, Dr. Elder. So the market has been like in this long rally, and a lot of people say, you know, because of all the printing of money and the U.S. is propping up the market, that it's due for a crash, and it's the propping up that's keeping it going. Do you see a crash coming? What do you see in your crystal ball, which I know I'm not going to hold you to?
Well, I wish I had a crystal ball. If I had a crystal ball, I would own this darn thing. But what I say, I think the bull market ended in 2015, several months after Robert sold. He sold just a couple of months early, which is a wonderful mistake to make. And of course, it's not a mistake; it's the intelligent way of doing things. But the bull market ended in 2015. The market went up pretty straight, from 2009 to 2015, and most of it was on government pumping in enormous amounts of money into it. But in 2015, the market stopped reaching new highs. It would break out to a new high. The Dow would make a new high by 50 or 100 points and collapse back into the morass. Another 50, 100 points up and a collapse again. And then by the end of 2015, the market began reversing, and we had, of course, this very bad drop in January and February. So I think now we're in a bear market, and the definition of a bear market when the market makes lower lows and lower highs. So the market made a record low in the autumn of in the fall of 2015. It made a new low in October, November 2015. It pulled up in December, made a new low in January and February. So the pattern now is lower lows and lower highs. So I do think we're in a bear market now.
So,
however, on the crash business, with all my tremendous respect for Robert, I'm not completely sold on the idea that we're going to have a crash. We're in a bear market for sure. Prices are headed lower. But in my experience, the power of bull markets and bear markets tends to alternate. If there is a strong bull market, the next bull market is going to be kind of so-so. We had a horrendous bear market in 2008, the worst in a century. And my expectation would be that a bear market of that magnitude is going to, the next bear market is going to be relatively mild, sort of like what we're having now. And the reason for that is that markets always do the unexpected. So everybody expects the history to repeat. But as some wise person said, the history rhymes, but it doesn't repeat.
Okay, once again, it's Robert Kiyosaki, the Rich Dad Radio Show. Today we're talking to Dr. Alexander Elder, professional trader and author. What we're talking about fundamentally here is the difference between a trader and an investor. There's technical trading and fundamental investing. And since most people have zero financial education, they don't know the difference between technical and fundamentals. And I would say Buffett is primarily fundamentals, and guys like Soros are technical. But as I've said to Dr. Elders, and I say to most of you, I'm a big fat furry bear. I love crashes. I can't wait for them. Because like right now, bonds are, the yields on bonds are crashing. What's good, because I can borrow money at 2.5%. Kim and I remember borrowing money at 12%. So a crash in interest rates and stuff like that is bad for savers, but it's really good for investors. So when we come back, we'll be talking to Dr. Elder because he is an educator. He has a large following of people who follow his system of trading. The point of this show is if you understand you have financial education, you don't really care. For example, when the markets crashed, the real estate market crashed in 2007, I thought I died and went to heaven, and I couldn't believe it. They were giving real estate away, yet other people are crying the blues. And then after that, to try and get the market to come back up, all markets, the Fed just keeps lowering interest rates. And now in Europe and Japan, we're in NIRP, negative interest rate programs, and people are still saying you should get out of debt. So why would you get out of debt when they're going to pay? You have to pay the banks to keep your money. It doesn't make sense to me. So our guest today is Dr. Alexander Elder. He is a psychiatrist in New York City, and markets are nuts, and money is nuts. So once again, you can listen to this program, Rich Dad program, on your time, your schedule. We have a Rich Dad Radio app. You can listen to this podcast again at richdadradio.com. The reason we archive our programs is because repetition is how we learn. And this is especially true for those of you who are risk averse. What if the markets come down? I'm saying, thank you. What if the markets go up? Thank you. But if you're saying, that sounds so risky, listen to this program about 10 times, get your friends, listen to it, and discuss it. Because it really doesn't make any difference if you have financial education. You can trade a market going up or coming down. Any comments, Kim?
Well, I think that's the point. That's the whole Rich Dad point. The three sides of the coin is there. It goes up, it goes down, and it goes sideways. And you need to understand what's happening. And too often people just put their head in the sand and go, my 401k is like I just keep feeding it, but knowing that if the market does come down, they're going to lose money in that. So
and what I think
it's
is
an
funny,
important show.
Yeah, the market crashed at 14,000 in 2007, and now it's at 18,000, and people are real happy. I'm going, I wouldn't be happy at 18,000. I'd be looking for a correction. So our guest today is Dr. Alexander Elder, and he is a man, I've taken courses from some of his disciples, that it really doesn't make any difference if markets are going up or down because you can trade it either direction with financial education and do quite well. Would you agree with that, Dr. Elder?
Well, thank you very much for your kind comments. The only thing that matters to me is to find the direction and to find the extremes in the markets. Right now, the market is rich, so it's a good time to be selling and selling short. Of course, you've done it much earlier. You sold in May of last year, which was a fantastic time to do it. And eventually, this market is going to come down. Now, the question is it going to come in a crash? Is it going to come in a slow slide? Opinions may vary about that. But once it stops coming down, that will be the time to buy the thing. So if someone has a 401k, keep on throwing money into it, but certainly now is not the time to go shopping. The time to go shopping is at the bottom of the market.
So tell us how you train people to do what you know. And, we've had you on a program before. You're very popular. But I think you gave somebody you gave the last program you were on, give us the best word of advice. It takes about 4 years and anywhere from $20,000 to $50,000. It's like getting a college education.
Right. Closer to 50, I would say.
Inflation.
And most of that money is going to be in losses, because the education itself is inexpensive. You buy a few books for $50 a piece. You may take a course, spend a few $100, a couple of $1,000, but most of that $50,000 is going to be your losses.
Right.
And so, Dr. Elder, at the break, and you just touched on it a little bit. You talked about the difference between direction versus target. So we've had a lot of guests coming on the show, and they say markets are so manipulated, and the Fed is out of tricks. They can't lower interest rates anymore, and so they're predicting a crash, and the crash to you would be the target. Is that right?
Yeah, that's to me that's more bravery than I possess. The market is clearly overvalued here. I'm short. I'm sitting talking with you, and of course I'm talking from in front of a live screen which has all my stocks there. And I'm short.
Short meaning you're betting on.
Short meaning I'm betting on a decline.
Down.
I'm betting on a decline. Now I don't have enough courage to say, it's going to be a crash. Let me bet on the decline as long as the thing is declining, and then when it stops declining and bottoms out, I'll have cash on hand. I'll be covering my shorts, and I'll have cash on hand to be buying. And I'm already starting to make a list of stocks to buy. A friend of mine from Ireland emailed me a couple of months ago, was so excited. You mentioned JCP, remember? He was so excited about JCP at $11. And I look at Allergy. That thing is overvalued. I would like it much more at 9. He says, it's not going to come to 9. I said, well, let me put an alert in my brokerage account. When it comes to 9, I want to be sent an email from my broker. I'll just look at it now. It's 9:14. As we sit. I guess that email is coming soon. And that's not really a very big bottom. But there are lots of other stocks that are headed, good stocks, stocks with good histories are coming down. And when they come down low enough to previous support levels, whatnot, that will be a buying opportunity.
So how does a person learn from you? That's really what we want to get, because
they should begin by reading my books. I mean, I put my heart and soul into those books. I really wrote them the best I could. And actually, my last book is called The New Trading for a Living. It came out in 2014, and it's a bestseller on Amazon. Find my website, elder.com.
So Dr. Elder, let's say I'm a passive investor. Let's say I'm working my job and I've got my 401k and I've got some savings, but I'm not right now I don't have the time. I'm not going to take the time to learn all this trading system and be a trader. Right. What would you tell me?
You have to learn something, because if you learn nothing, you should really not be in the market at all, right?
You're an optimist. So
you've got to learn something. And I would say that the simplest technical tool that I would have you started on is this indicator called the New High, New Low Index. If you open the Wall Street Journal or even maybe a local newspaper, every day they will have a list of stocks making a new high for the year. Those are the leaders in strength. And stocks making a new low for the year. Those are the leaders in weakness. And as long as there are more new highs than new lows, it is safe to hold stocks. As soon as you see that there are more new lows than new highs, you should sell and be in cash. And it's easy to do, especially in your 401k, because you don't pay short-term taxes. You don't pay taxes on short-term profits. But you should swing between stocks and cash depending on the balance of the new high, new low index. It's really the best and most sensitive indicator of market leadership. And as we know in life, leaders lead and masses follow.
Once again, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Today we're talking to Dr. Alexander Elder. He's one of our heroes because he comes with a different point of view on investing. He is more on the technical side versus fundamentals. Fundamentals are the basic, income, expense, asset, liabilities of a company. And a technical trader, and the reason he is so good at it, he is a psychiatrist by training. And technical is measuring the mood or the sentiment, the ins and outs. Are people optimistic or pessimistic? And when there's a crash, what happens is that's when the whole herd, they're sitting in this theater and somebody yells fire, and everybody wants to get out. That causes a crash. But most of the time it's going up and down, people eating popcorn and not eating popcorn. That's the real market out there. So we're talking to Dr. Alexander Elder because, as he says, the market is at an all-time high. And as many of you know, there's many, many people today, my age, who will never be able to retire. And they should we get into the market now? Should I get into the stock market now? And it's at an all-time high. And it's like we said, that'd be like J.C. Penney saying, our jeans are normally $10, but we're going to raise it to $20. So everybody runs in and buys $20 jeans. That's not the way it works. Everybody's going to wait for the jeans to go on sale for $2, then they're going to buy. But when the stock market has $20 jeans selling at $2, nobody wants to buy. It's really ridiculous. Our message here at Rich Dad Poor Dad, or Rich Dad Radio, is that it doesn't make any difference if you have a fundamental technical education and understand markets. Any comments, Kim?
Well, on changing subjects a bit, I want to ask Dr. Elder if in the news recently there's been a lot of talk about Goldman Sachs now is going to serve the masses, where in the past they only served high clientele and investment customers. Now they're going to go to the
rich.
Yeah, now they're going to the masses and offering online banking. Do you have an opinion on that one way or another? What effect is that going to have?
This reminds me of what Ronald Reagan said. When people come to the door and say, we're here from the government and we're here to help you,
yes,
he counts his silver.
Yes. So Goldman Sachs is here to help us?
Goldman Sachs is here to help us, right. Goldman Sachs and Mother Teresa, they're there to help you. Goldman Sachs is not doing nearly as well as it used to do because we essentially have a socialist at the top of the power pyramid. And the system is being made less and less business friendly, and as the system becomes less business friendly, companies have tremendous handcuffs placed on them, and they can no longer make money the old-fashioned way by whatever that was. And so now they start serving the public. If you think that somebody is out there to serve you, who is not your family member or friend, you better take off your pink sunglasses.
Because I find it interesting if they go to negative interest rates, they could bring all these people in and new customers, and then also go to negative interest rates, and all these people are then going to have to start paying Goldman Sachs.
Yeah.
We never know. But anyway, this point here is that we're discussing the actions of people who are nuts. And that's why it's very good to have...
Robert, as you said, you have to wait for a sale. The last time we had a fantastic sale was in 2009. I mean, I remember buying General Electric at $6 and change a share. They're $30 a share now. I sold it a long time ago. I wasn't smart enough to go. It will go up 5 times. But that's the point. Those were the days when stocks were cheap. And now they're more expensive than they're cheap. And there will be time when they're cheap. And when they're cheap, you better have cash, and you better have intestinal fortitude.
And some financial education, which is why we recommend, reading the new Trading for a Living, Dr. Elder's book.
Thank you very much.
Like I said, because you have to have some financial education, sports fans. So today our special guest is the great Dr. Alexander Elder, professional trader and author. He's training as a psychiatrist, and he's a psychiatrist in New York City and taught at Columbia University. He is the author of Come Into My Trading Room, 2002, Barron's 2002 Book of the Year, Trading for a Living, and the new Trading for a Living. And the reason we have this program is because most people have no financial education. For those with a 401k or an IRA or even a government pension plan, like a state, CalPERS in California, a lot of those guys are like the California water table. They're a little they're a little underwater right now. And then not too long ago, Obama bailed out the Twinkies company, because their defined contribution, their the defined benefit pension plan for the Twinkies drivers was out of money. So for all of you who are counting on the stock market to have, eternal golf playing for the rest of your life, this is your program. Because as we all know, markets go up and markets come down. And I was at a party a couple of days ago, and I was talking about the crash coming. And this woman went ballistic. She went psychotic. She says, "What do you mean? What do you mean?" I'm going, "Hey," and with me, I don't fear it. Like in flight school.
Most people do.
Yeah, in flight school, whereas pilots, the Marine Corps teaches us to fly with an engine or without an engine, so you're not afraid of crashing. So our guest today is Dr. Alexander Elders, and his point of view is just watch the markets, learn something. You've got to learn something. Don't just sit there and hold and pray and hope we're the highest market in history. The Dow's never been this high, and people keep expecting it to go up, and the professionals are saying, well, maybe it'll come down. And what Dr. Elder says, I don't really care if it goes up or down. Any comments, Kim?
Yes, well, we were talking at the break, and Dr. Elder, this is a great example of what you do and how you do it. And you talked about a stock that you liked, and I'd like to have you talk about that and why you like it and what I can learn from you in the way you think about stocks.
Yeah, and we do not recommend investments and all this, neither does Dr. Elders, because that's highly irresponsible.
Far be it from me to recommend anything, because to give a recommendation to anyone, you have to actually know that person, what's their capital situation, what their risk tolerance, what their age, what their plans. I mean, there's no way you can advise somebody over the radio. But I can certainly share this little story, which will illustrate my approach to thinking about these things.
Perfect.
I've been to Brazil several times to teach classes, and a few years ago I was there. And they asked me, if you were trading, are you trading in Brazil? No, I haven't. I'm busy enough trading back home. But if you were trading in Brazil, you looked at so many stocks for us, what would you do? And I said, I would sell short PBR. Sell short means bet on a decline. PBR is Petróleos Brasileiros. It's a Brazilian national oil company. And there was a silence, the stock was trading at $70 then, and there was silence in the room as if I did something inappropriate in church. How can you possibly bet on a decline of the best, richest, most famous stock in the country? But PBR was in trouble, and around November of last year, somebody asked me to look at PBR again. I looked at it. I couldn't believe my eyes. PBR was trading at $5. And so from 70 down to 5. Gee, a $5 stock. And PBR owns all the oil under Brazil, which they can pump at $30 a barrel. They own oil processing plants. They own gas stations. I mean, this is a major one of the major oil companies in the world.
So when PBR was trading at 70, what did you see that said this is in trouble?
Technical signs. The moving averages were turning down. Completely technical.
All technical.
Overvalued.
Okay.
Overvalued. Trees don't grow to the sky, and everybody loved it. That tree has grown almost to the sky, and technical signs were turning down. But when it came down, when I saw it in November, and it was about $5, the stock traded at less than 10% of its bull market high. Meanwhile, it still owned all the oil. It still owned all the gas stations. It still owned. And there was a huge scandal going on in Brazil, which continues to this day.
I mean, the president or prime minister, she's going to be impeached, right?
Right. Well, they've been arresting and jailing people at the highest levels of the industry and government for almost a year now. There is a huge. I mean, the country is profoundly corruption is a huge problem in that country, and finally they got some people with clean hands who are rooting it out. So I bought my first slug of this stock at about $4 and change, and stock went down. It continued down and went a few cents below $3, reversed, and started going up. So I'm saying to myself, why is it so cheap? Well, two reasons. First of all, oil prices collapsed. Of course, oil briefly went down to $30, which was a break-even price for Brazil, plus the political scandal, which was all around this company, with the ruling party using this company as their party kitty box. And then it started going up. It went from 5 to 6. I bought some more. It went above 6. I bought some more. And what absolutely amuses me is that every time somebody gets arrested in Brazil, every time there is a piece of like horrible political news out of Brazil, the next day the stock goes up. It's almost like they're cleaning the stable, and the stock, the company is going to be operate like a normal company. So this is an example of what I'm doing. I bought on a deep sale, and I'm holding it on the way up. Now, am I going to hold it forever? And no, of course not. Am I going to hold it to $70? I don't think it's going to go up because dreams like that don't repeat. But I think it's perfectly capable of going to $20 or $30. And, buying it at 5, 6, 7, which is what it is today, holding it to 20, 30 is not a bad plan. But that's precisely the point that, Robert, you were making. You've got to love crashes because crashes create values. A year from now, people are going to be looking back at PBR and saying, it sold for what? For under $3? Yeah, look at the chart. That's what it sold for.
But Dr. Elder,
how come you didn't buy? I was afraid. Yeah.
Yeah, Dr. Elder, that was the same as Apple. Wasn't that true about 30 years ago?
Yeah. Unfortunately, I wasn't, smarts come late to people. And unfortunately, I wasn't smart enough 20 years ago to buy. Apple was at $20, that pre-split. And it went from $20 to $700. I wasn't bright enough at $20.
Just a technical question: can anybody buy a Brazilian stock? Can a U.S. citizen buy a Brazilian?
It trades in New York,
Okay.
Stock Exchange.
Okay.
It's an NYSE stock.
Okay, great. Thank you.
So once again, Robert Kiyosaki, the Rich Dad Radio Show. Today we're talking to Dr. Alexander, professional trader and author. And he is a very valued guest. He is a great friend and a great teacher, most importantly. And I highly recommend you read his book, The New Trading for a Living. His website is elder.com. And Dr. Elder and I have never really met personally, but I've met his students all over the world, and they're enthusiastic, they're happy, they love crashes, they love booms, they love busts. It's the greatest way to live because then you are not worried about things going up or down. And that is the message here at the Rich Dad Company. There's always three sides to a coin: heads, tails, and the edge, booms and busts. And as Dr. Elder says, I love it when markets bust. Right now, banks are charging you money for your savings, and people are still saving money. Are you nuts? I mean, your money has gone not so less valuable? Oh, no, I'm going to save money. And I look at that and say, well, I'd rather be borrowing money. Oh, no, that's risky. That's the price of no financial education. Any comments, Kim?
Well, I just want to go back to the oil company that Dr. Elders is
You
talking
got her excited
about.
now, Doctor.
And because it was all in the news now is all about OPEC and Saudi Arabia and what's happening with the price of oil. How is that going to affect?
There was a big meeting in Doha, Qatar. All these wonderful oil people got together, and they were going to cut production in concert to support prices. And of course the meeting failed, and so they announced that, we failed. We will not be able to support oil prices. So the price of oil dropped about $2 a barrel overnight. And from that point, it went up, one way. When I woke up and saw what was happening, I bought some. I traded. I took a couple of dollars out of the game. Didn't get the whole run, but, hey, a chunk from the middle. And it's higher now than it was then. The most important thing is not the price. The most important thing is how the price reacts to news. And here, a major price support meeting failed, and oil just shrugged it off. Opened lower, closed higher, and went up without looking back. So I think $30 oil is history, and oil is headed higher. And I think there's a tremendous opportunity coming across the board in oil companies. Not yet, not at the moment. They need a little more time to stabilize. Some of them got a little too deeply in debt. But basically, I think, I think Napoleon said that all generals lose by fighting the previous war. Wars always change and markets always change. So today everybody knows oil crash, oil crash, oil crash. Well, yeah, but oil crash already come and gone. We don't have oil crash anymore. It was last year. The story now, oil up.
I'm glad you're saying that because, we don't make recommendations, but I'll just tell you right now, I'm looking at oil because it's at an all-time low, and everybody's saying, oh, well, you shouldn't be buying that stuff. I'm going, Well, they keep burning it, so it's not like a pair of jeans, you can put on a shelf. They keep burning that stuff, and I kind of like it when it's low, but the average person's terrified of it.
Yeah.
Strange, isn't it? As a psychiatrist, what would you say about that human behavior?
I think lots of people operate on fear. There was a wonderful book came out a few years ago by a professor Kahneman. He got a Nobel Prize in economics, and he actually Nobel Prize in behavioral economics. A wonderful book called Thinking Fast and Slow, and he shows concrete proof that fear is 3 times stronger emotion than greed. So people operate on fear more than they operate on greed. And if you get rid of fear, you become a free man. And as a free man, it's a good way to live. And one of the ways in which you live, you make money.
Well, one thing I always talk to people, about fear and greed is that what's even worse than that is joy, because when people are joyous, they get stupid. Like when you remember the real estate prices. You buy a house for $100, and then next week it's $300, and all this. People got really excited. They kept buying bigger houses.
Sell, take profits. Robert, aren't you afraid not to have a job? Aren't you afraid to go home today and you don't have a paycheck? And what about a government pension? You don't have a government pension.
I don't have that. I just have a lot of fear, greed, and joy. So it's, I really, really appreciate you being part of our, our guest list here, because you always bring a fresh perspective to it. And the real, what we are is an education company.
And isn't it?
Once again, we're not recommending PBRs. I don't say we recommend it.
No.
We're not talking about the price of oil. We're talking about how you control your emotions,
Right.
And the education. So isn't it true that the more education, the more experience you have, the less fear you're going to bring into your trading? Isn't that correct?
It depends on the kind of education. Practical education, yes. Formal education, no. I think the higher level of formal education, the more difficult it is to make money in the markets.
You know why that is? Is because sometimes the higher your IQ, which is mental intelligence, which is how you solve problems on your own, what is more powerful is emotional intelligence, or EQ.
Yeah.
And if EQ, many times high IQ people have low EQ. So this part of the program is Ask Robert. That's where you get to ask your questions. You can submit your questions to AskRobert@RichDadRadio.com. So, Melissa, what's the first question, please?
Our first question today comes from Aiden in New York City. Favorite book, Rich Dad, Poor Dad. He says, Robert, you said you profited off the last big crash in 2008. Having predicted the crash of 2016, what is your plan to make money when the market crashes? Please be specific.
Yeah, that's a typical kind of question I get from somebody who is emotionally unintelligent, low EQ, high IQ. They're so afraid that their fear, either greed, fear, or joy, affects their brain cells. We're always told, I don't really care, it's going to go up or down. That's a market. And the real question is how do you handle the ups and downs? Because if you cannot control your emotions, you'll panic. And I said on this program before, so I was at a party a couple of days ago. I told the market's going to crash. I'm all excited. I'm happy. This woman goes, it's so rich. How dare you say that? I said, look, when markets are coming down, I'm high as a kite. But other people are going down, 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 and they think a crash is bad. And the purpose of the Rich Dad program and all of our products and all this, it doesn't make any difference, because some people will get rich going up, some people will get rich coming down. The object is get rich both ways. Any comments, Kim?
Yeah, well, Dr. Alexander Elder actually said it very well when he was talking about this Brazilian stock. He said, I can't recommend this stock to any of your listeners because I don't know their capital situation. I don't know how risk averse they are. I don't know, their portfolio. So what we're going to do, Robert, is probably not what Aiden should do. I mean, we could tell the whole world this is exactly what we're going to do, but most people, number one, don't have the education, they don't have the experience, they don't have the knowledge to do it. So
a lot of them are A students. They're waiting for some.
Well, they want to be told what to
tell them what to do.
Yes, tell me what to do.
Hey,
but what we're going to do is not probably what Aiden should do. So you got to get your own path and got your own education and get your own experience. That's what I have to say.
If right now what I'm looking at is oil. Dr. Elders talked about oil. Oil's at an all-time low. It's a time to buy. You know, we were selling at 110 a barrel. Now it's down to 20-something. That's good news. It's bad. Unfortunately, I think 3,400 people were laid off in Texas alone because of oil. So it's bad news for them. Our point here is this. There's no financial education in school. They don't have any EQ. So you have people with high IQ, like my old man, poor dad, but they have low EQ. They can't control their emotions. Next question.
Our next question comes from Monty in Canada. Favorite book, Rich Dad, Poor Dad. Stocks, commodities, or real estate? Which one is the best investment for the decade?
That's another low EQ question. You know, that sounds like an A student wanting me to tell them what to do. Look, lesson number one is you'd better choose your teachers wisely. And one of the reasons I don't like school, not that I don't like the person, but most school teachers are like my poor dad. They're good people, hardworking, honest, yada, 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 yada. But they have low EQ. They don't have high EQ. High EQ, emotional intelligence, is crucial. As we talked about on this program, you know, Dr. Ellis said fear is 3 times worse than greed. But there's another emotion higher than that. That's joy. You know, when somebody gets a pay raise, they spend their money. That's low EQ. Or, you know, when the real estate was going up in 2005, people were flipping property, buying new property. They were joyous. They were idiots. Idiots, complete idiots. Low EQ. So please understand there's 4 types of intelligences. There is mental, which is how you solve problems personally, like 1 + 1 is 2. It doesn't teach you how to take criticism or negotiate with people or take losses, which is EQ. There's physical intelligence. You know, golfers call it muscle memory. And then there's SQ, spiritual intelligence. You know, that's courage, love, respect, not taught in school. So the Rich Dad Company here is really into true financial education. And true financial education is not waiting for some poor person to tell you what to do, which is to invest for the long term, save money, and get out of debt and buy stocks. That is low IQ and EQ.
And I think Monty's question also goes back to the basics. I mean, there's 4 asset classes. There's business, there's real estate, there's paper, stocks, bonds, mutual funds, and there's commodities, oil, gas, silver, gold. She says, what is the best investment for the decade? The question is what's most interesting to you that you're going to get up and you're going to study and you're going to learn about and you're going to part with your money and learn more and more. It's not what's the best for the decade, it's what's best for you. So which of these asset classes grabs your interest and grabs your attention so that you're going to put in the time and the effort to learn about them? Next question, Melissa.
One more part about financial education. There's debt plus equity. Stocks are equity. Bonds are debt. You got to understand that. There's also credit and debt. You know, there's a lot to learn. So don't sit around like an idiot waiting for somebody to tell you what to do. The worst question you can ask anybody is, I got 10,000, man. What should I do with it? Well, the first thing you should do is shut your mouth because everybody's going to tell you what to do with 10,000. Just give it to them. Next question, Melissa.
Our next question comes from Namunji in Zambia. Favorite book, Rich Dad Guide to Investing. It says, what is the best investment you have ever made?
A book. I'm not very smart. I have very low IQ, but I choose my teachers wisely. Look, we've had Richard Duncan on this program. You should read his book. Okay, we've had David Stockman, The Great Deformation. I would read his book. We've had Edward Griffin on this program, The Creature from Jekyll Island. I would read this book. I would read Dr. Elder's book, The New Trading for a Living. We have Ken McElroy, The ABCs of Real Estate. We have Andy Tanner, who talks about cash flow from stocks. Look, books are the best teachers in the world because they come from smart people. The problem with the school system, and again, I'm not picking on the individual, but most school teachers have low EQ. Very low EQ. That's why they cling to a job for job security. And if you listen to them, you're an idiot. Next question.
Our next question comes from Charles in Chicago. Favorite book, Cash Flow Quadrant. It says, Robert, as we all know, a key to successful investing is having the right information. Which newsletters or periodicals do you subscribe to, and or where do you get your information?
It's a great question. There's no such thing as right information. There's just timely information, and you got to consider the source. I subscribe to a number of newsletters. Number one is Bert Doman, the Wellington Report. I would subscribe to his letter. Also, subscribe to Dow Theory, which is a whole nother series for stock guys. But there's a whole bunch of others, and there's a lot of free stuff on the web. But be careful. Remember, choose your teachers wisely. I don't like telling people what to do, because what I do is maybe not what you should do. Any questions, Kim?
Yeah, well, as you're talking about newsletters and information on the web, you really got to consider your source, too, because, for example, I get a lot of newsletters from different real estate investment companies, some of the big ones. And they're always talking about how great the economy is, how great it is to be real estate. So I take certain information, but I consider the source because, of course, they want me to buy real estate. They want to sell me a piece of property. So you got to also consider your source as you're looking at your resources.
And you see, most people who take advice from not smart people. They take advice from salespeople.
Yes.
Stockbrokers, real estate brokers, insurance brokers. Now, if you do that, you're an effing idiot. You know what I mean? They are selling you something. And you should always consider the source. Look, most people who are brokers are broker than you are. If you understand that, you'll be careful who you take advice from. That's why we at Rich Dad don't offer financial advice. Again, I'll say it again. When Dr. Elders talked about PBR, and this program is pre-recorded, but I would highly recommend you go to his website, elder.com, and start understanding how he thinks. Look, choose your teachers wisely. If there is any bit of advice, that's it. And that's why you find teachers who really understand what they're talking about and talk to your level. For years there was a thing called Greenspan. It was called Fed Speak. They purposely say nothing to keep you confused. And this guy Bernanke, some people call him the greatest guy on earth. And guys like David Stockman of the book The Great Deformation, who was Reagan's budget director, calls him the biggest villain of all times. So your choice here is not that one is right or wrong. Please choose your teachers wisely. Read your books carefully. If you like Rich Dad, Poor Dad, keep reading. If you don't like it, don't read it. It's really that simple. If you want to be told what to do, go to school.